What's going on, guys? Happy Friday. Hope you guys all had a fantastic trading week. What we're going to do right now is kind of slowly recap today's price action. So market's about to close here in just about a minute or so. So it's pretty safe to say we're going to close around this 19,160 area, right? So what we've seen over this week was some massive selling, okay? Earnings season is upon us. Now, whether, the selling is all related to earnings or just a lot of profit taking from essentially, the market's going straight up since the beginning of the year and even a little bit into the end of last year, is not for me to determine the reason why the market is going down. The purpose of what we do as traders is try to figure out where are the best areas of opportunity where we can potentially manage risk and make some money. So with that being said, we are coming off of highs of 20,983, which started on the 11th of this month of July. So you can see here, we've broken through a lot of my demand zones. Okay. So coming up to speed here this week, the big level that was lost was the 50-day moving average. Now, typically speaking, if you're trading below the 50-day moving average, it's not a very bullish environment. Sellers are generally more in control of the day-to-day action. Now, that's not to say that you're not going to get some bounces. It's not to say that you won't have a green day. We're going to close the day up 185-ish points, about 1% on the day, but the chart is still broken. So when you lose a macro area of demand, more bias, more leverage goes to whichever side that we're trading over or below. And in this particular case, even though we had a little bit of a dead cat bounce day today, the charts are still trading below the 5, 10, 20, 50-day moving average. And you can see here, this could be a good potential spot where we could potentially see the market go on a 2 or 3 day dead cat bounce. And the reason being is we have a 100 EMA as well as the 100 simple moving average. Now, if you go to yesterday's price action, this is what I want you guys to get out of this video. I want you guys to set a level, an alert below 18,883. That's yesterday's low. If we lose yesterday's lows, we are going to be losing this next demand zone of the 100-day simple moving average. And you can see us trading as low as 18,382. That would be the next landing spot. So this is 100% a short position if we do get below that. Now, if we hold this area, let's say we open up red on Monday and then we never really confirm yesterday's lows, I would look for the continuation of the dead cat bounce up there using that max pain as your stop below this moving average here, below this demand zone. Now, if we take out today's highs, we're looking at 19,297. We do have initial room into 19,400s. That would be the first potential pit stop I would see on the continuation of a dead cat bounce. So mark that level out too as well. I don't really think the bulls have no legs to stand on until we at least have a daily candle close over the 5-day moving average. Okay. And realistically, I'd like to see them reclaim the 50-day moving average before I start to put on a lot of size going back to the long side of things. What I'm going to do this coming week, okay, we're going into the market. The first thing I'm going to do is I'm going to enjoy my weekend. Hopefully play a little bit of golf, hopefully relax a little bit, spend some time with friends and family. And then once we get to around Sunday night, I'm going to do some more chart work and see how the markets open up on Sunday. And then going into next week, what I want to do is I want to obviously still be in scalp mode, especially if it's to the long side and we haven't had that day that closes above the 5-day moving average. I'm going to watch yesterday's lows. If we do start to confirm that, I want to be short and I want to be involved in that party, probably on a little bit more size. And then from there, we're going to take it day by day. I realistically, a lot of traders aren't going to like when we go into choppiness price action, but realistically, I'd like to see at least 2 to 3 days just of forming a floor down here. Realistically, come a little down, go a little bit back up, do that for about 2 to 3 days and then either pick a side. Because if we do that for 2 or 3 days, we're definitely going to have a bigger move coming out of it, whether that be the confirmation to the downside or a little confirmation that this bottom is going to actually stand. Now, we do have a lot of room to kind of push up. A good retracement spot that I would be looking for would be somewhere around 19,000 6,800s. Okay, so maybe about 600 to 800 points up. Now with the market going up or down 200, 300, 400 points in a day, that could easily be just a 1 or 2 day move. So again, the volatility is very, very high, and when the volatility is very, very high, you're going to have these exaggerated moves, especially summertime trading. So these moves are more exaggerated because we're in the summertime as well. So with that being said, I hope you guys all enjoy your weekend. Again, if you would like to trade with me, that link is down in the description box below. Also, make sure to like this video, guys. If you guys can help me get this video to 100 likes, I would very, 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 very much so appreciate it. Hit the subscribe button if you're not already a subscriber to the channel, and I'll see all of you guys on Monday.